Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. Global markets concluded a volatile week on a positive note for the second consecutive week. Sentiments improved after the US Fed's policy announcement, with the markets now pricing in easier financial condition in the US later this year, especially after the signs of recent stress among US regional banks, which are likely to tighten bank lending conditions further. During the week, the US Fed raised the Fed funds policy rate by 25 basis points in line with market expectations to a 15-year high. The US Fed Chair Powell sought to reassure investors about the soundness of the banking system, citing the recent failure of a bank did not indicate wider weakness in the banking system. The US Fed's policy action were followed by a series of central bank policy actions in Europe, where inflation continues to remain a challenge. The Swiss National Bank delivered its fourth consecutive rate hike, raising policy rates by 50 basis points despite the recent stress in the banking sector. Bank of Norway raised its key policy rate by 25 basis points and indicated that further rate hikes were likely. Finally, the Bank of England raised its key interest rates by another 25 basis points to a new 15-year high, another step in its struggle to tame double-digit inflation in the UK. Safe haven demand continued over the week. Bond yields fell as investors piled into the safety of US Treasuries, while gold traded near record highs. Despite a mixed start, major global equity indexes managed to post weekly gains for the second consecutive week. The MSCI World and the MSCI Asia ex-Japan Index was up 1.4% and 2.1% respectively. In the US, the S&P 500 index was up 1.4%, the Dow Jones was up 1.2%, and the Nasdaq index climbed 1.7% over the week. Back home, Indian equities started on a weaker note and traded within a range. The Nifty index declined 0.2% and underperformed global peers. Broader markets underperformed Nifty this week, with the Nifty Midcap Index down 0.9%, while the Small Cap Index was down 0.7% for the week. Among sectors, FMCG and pharma were the best performing sectors with gains of around 1%, while IT, realty and metals were the worst performers with cuts of over 2%. The Indian fixed income market had another decent week as bond yields fell across maturities, in line with the US bond yields. Domestic corporate bonds came under pressure later in the week as the government passed an amendment relating to capital gains tax on income from specified mutual fund investments from fiscal year 24 onwards. For the week, the 10-year Indian government bond yield fell 2 basis points to 7.32%, while the 3-year and 5-year Indian government bond yields fell by 4 basis points each. The INR appreciated against the USD amid falling US bond yields and weaker US dollar. For the week, the INR rose 0.4% to close at USD 82.2 per dollar. Over the coming week, all eyes will be on the domestic bond markets as market participants factor in the impact of latest changes in tax norms on capital gains from investments in specified mutual funds on the overall bond demand and supply balance. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.